Alrighty, good morning, good afternoon, good evening. Uh, I'm gonna go over Friday, what happened Friday, why we were looking for a relief bounce, and then I'm gonna go over my outlook for next week. So let's get into it. This is where towards the market open on Friday, 14th of November. Uh, as you can see, we've been pretty much fucking dumping since all-time high with little to no pullback since 26K or 25,800, whatever the high was, 25,700. Um, and we've been retracing completely with little to no pullback um, for those 2 days. So it was 2 days of heavy selling from Thursday and Friday, right? Friday overnight. And then Friday, New York comes in. We're looking for a relief bounce. But for us to look for longs, we're going to need a couple confirmations, at least for me. So my first confirmation would be a break over the 1 minute 200. That would be the bare minimum. The bare minimum for me to take longs would be the a break over 1 minute 200. A lot of people would long over here potentially just because they saw the double bottom get swept and then it reclaims, for example, here, and then you take it here. And potentially you could scalp this, but for you to catch the big move, the big picture, if we were to actually flip bullish, we would need to at least break over the 1 minute 200. So in this situation, I would be sitting on my hands until we reach the 1 minute 200. And I wouldn't want to long here because I would expect this. I would expect us when we do get to this, the initial test of it should give a rejection, right? Because we're still very bearish and it should at least give a reaction. Even if we're still bullish from this area in general, it should react. It should give a rejection and then reclaim back up and then go higher. So if we were to ever break the 1 minute 200, it's very rare unless like there's heavy buying pressure where we would just instantly rip through it. Those days do happen, but uh, in general, it will react to it. So in this situation, I'll be waiting, and we're getting into market open here, 9:15, and we would see us approaching the 1 minute 200, got close and rejected it. Hold on, this is going way too fast. Anyway, what happened? We reject the 1 minute 200 right at open, 9:30 opening candle opens upwards and then immediately inverts back down. And that's when we start heading lower and we sweep both of these lows. Once both of those lows were swept, then if you look at the bigger picture as well, on the 5 minute, we also had a low here previously and we broke below it and then started reclaiming back up. So we swept that low that I just showed you, and then we broke over the 1 minute 200 here. So this, at this point, I wouldn't have longed anywhere up until this point. And I didn't long here because I was not on the charts, but it is a long I would take. So in the situation, you could immediately, as soon as you see it break over the 1 minute 200 and start seeing price accept above, you could immediately either take it, for example, right here, you with a 20-point stop. You even do that. The thing is, nowadays you need a wide stop, so even a 30-point stop. And then what would be your target? It would be either the 3 minute 200 or the 5 minute 200, right? And only then would I have gotten bullish confirmation. Only after we rejected and then immediately got this buyback. You see how we immediately got bought back? These are very strong 1 minute candles. This is indicating the price is not accepting to go lower. Once we broke over the 1 minute 200, you could take it and then target the 3 minute 200, the 5 minute 200, even the 15 minute 200 if you want to be extremely greedy. The 15 minute 200 would be the max target on a trade like this. And you can see from a 15-minute perspective how this wick also, this looks like a very bullish wick on the 15-minute, sweeping those lows and then closing above. So you could take that long and pretty much hold it all day. And Pretty much no drawdown on that if you take it right at the 1 minute 200. And we could speed this up a little bit, see how it played out throughout the day. And I'll tell you where I actually longed. This is where I longed. I got to the charts late and I chased it. That's why I didn't really want to signal it, to be honest. But once I saw us reject the 5 minute 200 here, like you see how um, we were rejecting the 5 minute 200, but we kept retesting it multiple times. And you see how the 9 is curling over and it's holding. And then the 9 is about to curl over the 200. So as soon as this candle showed up, so like during this 5 minute candle is where I just took the long. I took it immediately right there. I had like I don't know what stops I had, but I didn't want to risk more than 20, probably 20, 30. I'm trying to have wider stops nowadays because of the volatility. It's pretty hard to have tight stops, but I took my long here and I was targeting 300 or something like that. Yeah, I was targeting the 4 hour. I was targeting the 4 hour 200 right here. Yeah, so 310. That's what I was targeting on my longs. And I took them at the 5 minute 200. So I was pretty late. The ideal entry would have been at the 1 minute 200. But not rejecting the 5 minute 200 is even more confirmation that we're pretty fucking bullish after all that downside that we got. So this was the long I took. And then the previously was the long at the 1 minute 200 that I showed you guys. But that's how you determine your bias for the day. And then it ended up playing out fully. I got trailed out somewhere in the middle. But it was a big day. It was a $13,000 day, I believe. And it ended up going all the way. It edged 4 hour 200, but didn't actually get to it. You see how it edged it. But you know, that's good enough. You should be trailing at that point. This is like a 400 or 500 point move. So that is the confirmation I got on Friday for longs. It would need to break over the 1 minute 200 first before I could consider longs. And you could see how price changes. The price action changes when we're below the 1 minute 200. In general, look at us. Look at how price moves when we're below it. Look at this. Every buyback gets sold off. Price action is just not good for longs. You could scalp it every time. You could scalp these moves all the way back up to the 1 minute 200, all the way up to the 1 minute 200. I've done this before, but for you to be comfortable holding longs comfortably, you need to be over the 1 minute 200, and that's it. And here, a clear break over the 1 minute 200 we got. And we haven't seen that in how long? 2 days. 2 days we haven't been able to break over the 1 minute 200, which is the bare minimum to lean bullish. The bare minimum to lean bullish is a break over the 1 minute 200. And then a break over the 2 minute 200 is even more bullish. A break over the 3 minute 200 is even more bullish. You get the gist of it, right? 5 minute 200 broke over, even more bullish. And we ended up going to the 15, right? And this is where we're starting to reject now. And yeah, so this is where we're at. Now, let's go ahead and delete all this. And we'll discuss the outlook I have. This is the first time I've looked at the chart, so I'm analyzing this in real time. So it's getting tricky. So we closed the week. We closed the week over the 9 still. Despite all of that, we still closed over the 9. And we've filled the gaps that we needed to fill. So we could potentially still be bullish. You know, it's tough to be bearish on this weekly chart. We drop down to the daily. This is where, I mean, trading on the, like, you can't make trades based off the weekly. That's just like looking at the bigger picture. We drop down to the daily. Let's analyze what we have. So we swept that low from Friday, November 7th, on the next Friday, literally a week after, swept the low, filled all the gaps, and then closed back over the 50 EMA. So for my bias this week, as long as we're over 25,000, we could just call it 25,000 psychological level, right? Like, might as well. It's close enough to the 50 EMA. So as long as we're over 25,000, uh, we could potentially lean towards more upside, right? But again, this is on the daily chart, and we're gonna have to drop down to lower time frames to actually look at how we would execute something like that. But in the bigger picture, in the grand scheme of things, as long as we're over 25,000 psychological level, I think there's hope for us to continue upwards, especially because we closed the weekly over the 9. So maybe a potential pullback. Well, who knows if we have a new week opening gap or not, but uh, we'll have to reanalyze things if we do have a new week opening gap. But we closed over the 9, right? So, um, so we're not that bearish yet, but there could still be more room for downside. It's just about where you would take your entry. So for now, I'm gonna lean towards keeping my bias towards uh, um, bullish, because we're holding over the 25,000 and over the 50 EMA. As long as we're holding over that, I'm gonna lean towards bullish. Drop down to the 4-hour, and this is where we can start seeing like how we would execute. So for me to be able to long, I would need us to be over the 4-hour 200. And I know I said I'm bullish as long as we're over 25,000, and I am, as long as we hold that. But that doesn't mean I'm gonna long from down here, even though I'm bullish as long as we're holding above that. I want us to, for me to be favoring longs, I need us over the 4-hour 200 again. And even if I miss a 300-point move to the upside because of that, because I don't want to take it that early, then so be it. I don't want to take it that early, right? I don't want to long it as long as we're below the 4-hour 200. So this could be the confirmation that you look for. You see a break over 4-hour 200, maybe a hammer structure 4-hour candle, and then we could play it towards the upside. But this is getting tricky here because it could still be bearish. As long as we're below the 4-hour 200, there is hope for them to send it back down, right? And break through the 25,000 psychological level. So, and that shows up on the 15, by the way, because this 15-minute chart, so this exact setup on the 15-minute chart, uh, looks like an amazing short for me, especially after like the momentum on the longs, just for a healthy pullback. Although it did give a reaction. So in this situation, you see the break over the 15-minute 200, and then the price broke down below again, right? Once you see this part here, like let's try to do this. I'll show you how I would be reading this. So you would see this, and you start watching price action, and you see we did not immediately reject the 15-minute 200 smoothly. We broke above and then broke below again, and that's when we rejected the 15-minute 200. So if you took the first initial touch of it, that probably would have stopped you out. Yeah, that's too wide of a stop. So confirmation on shorts would be after you see it break back down like this here, you would wait for another retest. Like, let's see if we get another retest. And then here you get another retest, right? And this is where you could take a short over here. That's a wide stop. You could have it at this wick right here, the stop. That's about as wide as you could go, really. And that you could scalp. You'll see it on a 1 minute perspective. You could scalp the short. You see the 1 minute 200, the 1 minute EMA is curling down too. We're holding below the 9 the whole time. You could keep holding shorts as long as we're holding below the 9. As soon as we break over the 9, you cut it. See that? So immediately over here, this is your safe exit. When it went back here, right? And that's a decent, that's a 100-point move off the 15 minutes. So you see it break above, but then immediately break below. And then you can see structurally, like, it's also a decent area to reject. It was the low over here. See this low here? We draw a line. Ended up just wicking over the 15-minute 200 and then immediately rejecting. And that's where you can start looking for shorts like this. And you could target it. If we're still bearish, this setup will actually give a big short, not just this 100-point move. If it breaks below the EMAs, it could potentially come back and make equal lows again, or even new lows. So we'll have to just watch the price action and see. But what happened now is that we, on lower time frames, we rejected the 15-minute 200, not perfectly, but around that area. And we rejected all the way down to the 5-minute 200. That could be your target on shorts as well. So you could short the 15-minute 200, the retest of it here, after we broke below it, because you can tell price is not accepting to be higher here. We would have held over here just like we did at the 5-minute. You see at the 5-minute how we didn't really reject. You see how at the 3-minute we didn't reject when we got to the 200, and at the 1-minute we did not reject, right? But when we got to the 15-minute, we broke above, tapped that low over here. It did technically disrespect the 15-minute 200, but it still broke below it, right? Like it doesn't have to be perfect, right? It doesn't need to reject perfectly here for me to be biased short, right? If it breaks above it for 1 second and then immediately breaks down below it, like the thesis stands, right? I'm still thinking the same things. If I see this rejection here, this is still the 15-minute 200 rejecting, right? For me, even though it disrespected it, right? This is why it's not always ideal to take the initial tap. You want to watch the price action when we do get to the moving averages. That's what it's really about. Like that's why I kind of discourage taking the tap, because I do take it often, but it's definitely not the safer entry, right? You would want to wait for confirmations, more confirmations. But yeah, you see how we rejected the 15-minute 200. Once we retested it, you could take a short targeting where? The 5-minute 200. And you would immediately get out here. And you can see the 5-minute 200 held and gave a reaction perfectly with no drawdown towards the end of the day as well. So, and when we know how that 350 candle does, so you could even scalp that. 3:50 p.m. candle into the close gives you 80 points too. Right at the 5-minute 200. Did not see any drawdown. But I don't know if you'd be wanting to trade that late. So we'll have to see what's next from here. If we hold over the 5-minute 200, then we could potentially go back and retest the 15-minute 200 and break through it, and then head towards what? The 30-minute 200. We break through the 30, we head towards the 1 hour 200, right? You get the gist of it. So that's how you that's how I cycle through the time frames. That's how I set my targets. That's how I set my exits and entries. It's all based on the 200 EMA. I take a 200 EMA entry on one time frame and close it at a 200 EMA on another time frame. Literally, this is what I do. I just ride things from one time frame's 200 moving average to another. So if you were leaning bullish from here, you would take the 5-minute 200 long, and your first TP could be the 15-minute 200, and then your greedy TP would be the 30-minute 200, right? And that's if we're bullish from here. If we're price is gonna hold over 25,000. That's why I said if we hold over 25,000, I'm gonna be bullish, because we could potentially head back up to the 15-minute 200 and rip through it this time and actually continue towards more upside, because obviously we still have a lot more room towards upside, but we're getting to a really, really important level here, that 25,300. And what is what is 25,300? Conveniently, right? Not forget about EMAs, right? Look at hold on. Forget about EMAs, right? Just structurally, like look at this level that we're at here. It's a very important level. 25,300. We have a reaction here, reactions here, gaps into it here. It's a level. And then if you look at the moving averages on, what does it happen to be? It happens to be where the 4-hour 200 is right now. So 25,300 is going to be a very important level. Break above that, and we're actually really, really bullish. As long as we're below 25,300, there's potentially more room for downside, and the bear move could not be over. So I could see both situations at this point. So it's going to have to be a game of reactions. I'm not going to try to predict it. I'm going to try to react and based on what I see during market hours. So as long as we're below the 4-hour 200, I still think there's potential for us to go lower, right? But if price fails to break below 25,000 psychological level, then potentially there's still more room for upside. More room, right? Since Friday's pump, it could be not over. It could be still more room towards 25,300, maybe 25,500 range again, right? Which would be the 1-hour 200 EMA, right? And which would be these lows here, all these wicks. So we could potentially come back up to this zone right here. So we'll see how they play it out. If they hold over 25,000, we'll lean bullish. Break below it, and we could potentially look for continuation down. So that's NQ on multiple time frames. This is how I analyze it. This is pretty much me analyzing it in real time. I didn't really prepare like what I thought about it. I just looked at it right now and explained like what I'm thinking. Let's look at gold. God damn. All right. It's getting tricky, boys. Because, like, did gold top or not? That's the question, you know? And then good fucking luck trying to figure out where the top is after 9 weeks, 9 green weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9 green weeks. Yep. And we had 2 green weeks in a row, 3 red weeks preceding the 9 weeks. And then we closed last week green, but with a nasty, nasty wick. On the daily, we attempted to reject the 9 and continue lower, but price seemed to come back and retest the 9 and actually managed to get a break above. The 4-hour almost tapped the 4-hour 200 on that downside move from what is this, 42.50. Almost tapped the 4-hour 200, but ended up closing over the 4-hour 100. All right, so if we hold over 4,080, we could be leaning towards upside. So if we hold over 4,000, let's just call it this low, 4,077. We need to hold above 4,077 and reclaim 4,109. So we need to hold this 4,077, which is what? which is the 4-hour 100. I want to see us hold this and break over the 1-hour 200 for me to be leaning longs. I need price over 4,100 for me to be bullish. Okay, and that's the bare minimum. Even then, I feel like I would be a little uncomfortable. Let me drop down to the 30. So yeah, so this still looks bad right now. This still is a very dangerous spot to long because we're still below the 1-hour 200. We're below the 30-minute 200. 15.5, everything below that, right? Except the 4-hour. It's only the 4-hour 100, which is attempting to hold as support. You can see it's attempting. On Friday, the 14th, in the morning, that 4-hour candle closed above, and then this one wicked below and closed above, and this did the same, right? And it seems to be that we're trying to hold above this level, right? But for me to be comfortable longing, I would need us to be at least over 4,100. And even safer confirmation would be waiting for a break over back into this area. Even here, I would be more comfortable longing 40. Like if we go back up to 4,200, this is when things actually look really, really bullish again. When we're in this area again over here, because this is what we would have wanted to see, right? If we wanted to continue upside, all we would want to see is healthy touches over at the 4-hour 200 or at the 15-minute 200, right? But the fact that we're over the 4-hour 200, we should be still leaning towards upside on higher time frames. So in general, when I'm bullish on anything that is over the 4-hour 200 in general. Oh my god, get this shit off my screen, bro. Fuck this brush. As long as we're over the 4-hour 200, we're not in a bear market. All right? No matter what. You could even argue like the 1-hour 200. Look at the 1-hour 200. Since August, right? Since August, gold hasn't broken 1-hour 200 up until now. So you cannot lean bearish if we're over the 1-hour 200, if we're over the 4-hour 200. We will never be in a bear market as long as price holds above those moving averages. All right, so that's what I'm thinking on gold. Needs to hold over 4,077, reclaim over 4,100 for me to lean bullish. Otherwise, as long as we're holding below 4,100, there's still room for downside. If we hold below 4,100 and breached below 4,077, we could actually have much more downside, potentially back down to 4,000 psychological level. So we need to watch out and we need to be reactive. So we'll see what price gives when the time comes. Holds over 4,077, reclaims over 4,100. I'm leaning bullish. Below 4,077 and price remaining below 4,100, even if we chop here, I'm bearish. We break above, I'm potentially bullish. I'm cautiously bullish here, right? We break over 4,200, I'm confidently bullish again, okay? And that's what I think on gold. Yeah, 4,077 that we were discussing also happens to be, you could also just consider the daily 21. As long as we're holding above the daily 21, the new daily candle opens up, makes a wick down at the daily, and holds above. If we're above 4,077, potentially we could continue upwards. Otherwise, if we break below 4,077, we might want to go back to the 4,000 range down here. And potentially, if we break these lows, then things are starting to really look bad for gold once we break the 3,900 level. Gold below 3,900 could potentially be setting up for a big downside move, because that would be a major break of structure on the daily time frame. So until then, uh, we're not betting on a crash, right? Because we're gonna blow everything betting on a gold crash nowadays. So we're just gonna be reactive. If it holds above 4,077, we're not gonna lean towards downside though, or I won't. Yeah, hope this helps. Let me know if you have any questions, and hope we all have a good week next week.